Thanks for tuning into the All Funds Network podcast. Today we're here with Harrison Frye of Acquire.Fi. Harrison, thanks for joining us, man.
Thanks for having me. Appreciate it. It's been a long time coming. We've been trying to make this happen for
Absolutely.
a few weeks now. So glad we finally got to do it.
Yeah, we're overdue. I know there's been a lot of summer travel, but we're all here. We're back. Let's start maybe with your story. So, tell us about your background and walk us from the start and up until kind of where you're at right now with Acquire.Fi.
Sure. Yeah, my background in crypto started in 2016. Actually started selling Bitcoin for gift cards. So we were using that actually on our e-commerce stores. So I was one of the early raw doggers back then. Trying to make it happen. Had a few renditions of that business. Fell in and out. Actually ended up meeting my co-founder today, Jan Strandberg. He was one of the CMO. He was actually the 4th or 7th employee at Paxful, which is basically the largest peer-to-peer Bitcoin exchange from back in the day. It was them and local Bitcoins. So I met him because we were one of the biggest vendors on Paxful. And yeah, now fast forward a few years later, we started Acquire.Fi 3 years ago with the...
Actually, before you get into Acquire.Fi, what happened with your Bitcoin for gift card business?
With those kind of businesses, they're not a totally sustainable thing. It's kind of a bleep, a small moment in time that you can make some business happen, and we did well. We had an e-commerce business as well that we were running in addition to that because of the gift cards. So we were drop shipping with those gift cards, mostly like different Walmart gift cards and things like that.
Yeah.
And then we're also selling the gift cards to other e-commerce vendors. And then there had a time at a marketing. I was a chief marketing officer at a DeFi protocol, and then also on the side had a marketing agency. We helped a lot of DeFi startups. And then we started Acquire.Fi from there. And the vision really was to be the only and the biggest merger and acquisition marketplace for crypto startups and crypto companies to basically connect buyers and sellers of crypto businesses, put them together, and then we take a fee in the middle for the introduction. From there, we've really expanded, not just on the merger and acquisition side, but we also have a different vertical, which is the secondaries. So secondaries are, equities, they're lock tokens, they're SAFs and safes, things that are companies that are already launched. Sometimes investors want to sell those, and produce some liquidity before a public event, or before their SAFT or their vesting happens. So we also do the same there. We again introduce the buyers and the sellers, and take that introduction fee. We don't really do any brokering, but we're just taking the introduction fee. And then OTC, which is very similar. We categorize that as locked tokens. So we have some pretty hot deals right now on the locked token side. Some of the bigger names out there. We don't share all of them publicly. The ones we do share are on our website and on our deal flow channel. But some of a lot of the deals, we really just have a relationship with most of the funds out there, and we're constantly talking with them, living in the Telegram metaverse, as I like to call it. So we're living in that metaverse. Most of my day is spent on Telegram, not email, not anything else, and mostly just group chats with other funds, buyers and sellers, and we're sharing deals and trying to make things happen. That's really it. Deal flow makers.
Yeah. So you guys started Acquire.Fi 3 years ago,
yes.
Right? Okay, so what was the kind of impetus? Like, what kind of, what'd you see in the market that made you think of this as a good opportunity?
My co-founder Jan, he's the ideas guy. He's the crazy, let's go to the moon guy, and I'm like the let's think about this a little more. I'm more the implementer, right? And he's the idea guy. So
Hmm.
he saw in the market, and it was true. We were both getting a lot of deal requests, just like from our friends, just from founder friends, like, hey Matt, just let you know I'm selling my business. If you know anyone, let me know. Not like we were doing this as a business, but we got one, we got another one, we started getting a few more, and obviously. We had a history in e-commerce as well, so there's lots of e-commerce
Mhm.
selling websites like Flippa,
Yep.
Empire Flippers, Biz by Sell. So we saw these out there, and they don't offer really Web3 products. There are sometimes some crypto businesses on there, but it's not really like true Web3 people, crypto people that have crypto natives. Um, so we just kind of started it naturally because our friends needed it, and we saw the need in the market, and we started Acquire.Fi. Definitely a slow start. We really had to start creating the narrative of what merger and acquisition is in Web3. Um, Really, most of the M&As that you see publicly and that are popular that you know of are happening from like the big centralized exchanges, um, at least at that moment in time, and they were really
Yeah.
just big ones, at least from like the popular scene for what people are seeing. So we really had to start creating that narrative of what is M&A in DeFi, smaller projects. We kind of specialize in like the, let's say, 5 to 50 million size on M&A. That's where most of our deal flow is. We do have a few that are bigger, but that middle market is there's a massive amount of buyers in that middle market and a massive amount of sellers in that middle market. Once you get to 100 million and above, the amount of buyers and sellers are severely attenuated. There's only so many people with $100 million kicking around or more. There's way more people with $5 million than 100 million, and not just people, but funds
Yeah.
and private equity and
Yeah.
everything. So that's where we stand now. Again, we do have some bigger deals, but that's kind of our middle market deals. And
Yeah. Just curious. I
yeah, I hope
mean,
that
you mentioned the
answers.
kind of deal flows around that 5 to 10 million plus range. What do those kind of deals look like? What is the process? How is it different than you would say the traditional M&A process? There's tokens attached to the deal. What does that look like?
Yeah, 5 to 50 is probably our range, but yeah, I mean, it's really not all that much different from normal M&A. Besides, there are some edge cases for sure, but for the most part, you can think of it just like most M&A, where there's a P&L, there's a business, there's some assets. A lot of the time, the business isn't what's being sold, the security is not what's being sold. Most of the time, it's just the assets, so the brand, the website, the community, the keys to the kingdom kind of thing, not the actual, you know, Panama entity or whatever entity, because so much of Web3, is really there's just a shell corp, and there's really not much within that shell corp. Perhaps there's um, some exchange documents, with centralized exchanges if there's a token listed, or there's some employee contracts or things like that. But for the most part, there's no banking, there's no credit. That's something you want to buy, right? When in traditional M&A, like if there's a massive line of credit, there's a massive banking infrastructure. That's something that's a really big asset and something that's hard to recreate, or licensing as well. So there is some licensing exceptions here in Web3, but yeah, for the most part, it's assets. And then when you look at tokens and how does that differ, like from a traditional versus Web3. Obviously, tokens play a massive role in it. There's all kinds of flavors of what tokens, what kind of role tokens play in there. starting from the bottom, there's kind of, a token with not much liquidity. There, it's listed on a few lower exchanges, like maybe tier 2, tier 3 exchanges. That's not really a massive asset to be transferring over. On the other side, we just had we're in talks with a pretty large DEX. That's how much can I say about this? They're pretty large DEX with a massive amount of tokens. Massive market cap, over $100 million in the market cap, and a large portion of those tokens. Something like that, of course, that's something that has a lot more value and is something that's adds to the deal in terms of assets. And of course, they have an MRR and everything else like that, revenue. And that's kind of also where our secondary knowledge comes into play, where let's say that large DEX, with a massive amount of tokens, what is that actually worth, right? What is the liquidity of those tokens? How important are those tokens to the DAO or to the foundation?
And these tokens they're holding, Bitcoin, ETH, or is this their own tokens?
Their own protocol token, yeah.
Yeah.
So yeah, how important that is a DAO. You can't just liquidate all of it, day one, if you're a buyer, because it could ruin the DAO, also liquidity, etc. So looking at those kind of things and seeing what is that really valued at. Just maybe if it's let's say 50% of $100 million market cap, it's not necessarily worth $50 million, right?
Yeah.
There's definitely some discount and some carry there.
Mm-hmm.
And then you mentioned treasuries, right? Like if they're holding Bitcoin or Ethereum or Solana, those are obviously a lot more liquid, so there's definitely more of like a 1-to-1 ratio there. And for the most part, buyers and sellers really just kind of take that off the table unless those treasuries are locked.
Makes sense.
But
just sell them in the open market.
Right.
Sell the rest of the business.
Yeah, if we were buying, your company here, your podcast, or maybe the Thai or something, and they had a massive treasury of Bitcoin, probably just don't even include that. Unless we really wanted it, we could do an OTC trade, but it would probably be different.
What are some of the most misunderstood risks when it comes to secondaries or secondary token exposure that people kind of forget about or should pay attention to?
I'd say biggest risk is like third-party risk. So we always try to be direct with our deals. So we're direct with the founders or the foundation, and then the buyers and the sellers. But when there's other brokers involved, or if there's like a forwarding contract with the seller, so that doesn't mean that, let's say you're buying a SAFT of some larger foundation. You want your name directly on that SAFT. You don't want necessarily a forwarding contract that goes to it. There are ways around that, and we have worked around, like a foundation not accepting any changes in SAFT agreements or SAFE agreements. So we have done that, and we are actually with our partners actively working on a really cool way to get around those forwarding contracts. Basically, kind of like if you think of like an insurance plan around it. So that's an exciting new product that I can't release too much info about, but you'll see that rolling out soon. It'll be really cool.
Awesome.
Cool. Walk us through the process of hey, we're looking to get our business sold. Kind of walk us through kind of start to finish for a merger or acquisition.
So if you're a seller, usually you come to us via our Telegram channel, our Twitter, our LinkedIn. You're talking to one of us, or you're just going direct on our website and filling out our sell side form. From there, it's kind of all the information. It's in our CRM. Everything's private with us. We take pride in really having privacy in all our conversations. We have a really small team. It's really tight, so it's not like everyone's got access. It's not like there's a 30-person team that all has access to a CRM. We're actually just we're 7 right now, so everything's really tight. And then we kind of review the deal and onboard. We sign a success fee contract. For the most part, it's just success fee based. There's no upfront costs. Sometimes there's or sometimes we negotiate out exclusivity. So for the most part, it's pretty much no no big commitments on your end as a seller.
Mm-hmm.
And yeah, P&L is still a massive thing. Businesses have to make money. Unless there's some really important asset like a massive community, a massive amount of readers, viewers, maybe some tokens, but for the most part that can be translated to P&L through market making or something. And yeah, then we go through, onboard you, make sure we have marketing material. A lot of the deals go on our deal flow marketplace and our socials. Some deals, some sellers choose to stay private, and we don't list them all. So like some of the bigger deals, like the one I was alluding to before, and actually one I can talk actually publicly about. It was a DEX we just sold last week. It just got announced. Kraken's fund, Inc. fund, Kraken's new layer 2 that they're coming out with.
Yeah.
Inc. So they bought Vertex Protocol. So Vertex Protocol is a perps DEX. And we helped introduce and advise them on that. So that one, for example, when Vertex came to us, we onboarded them and all that. We didn't post it publicly. We didn't, go to everyone. That one was a much more private, high touch situation, and that really depends on our gumption on the deal and our confidence on the deal. We felt like Vertex was a great company that we would have success in selling. So after a long amount of time, M&A takes a long time. We finally got it closed, and it announced last week. So Kraken actually bought it's not officially Kraken, it's Inc. Fund, but Kraken supported the deal and backed the deal and all that.
Yeah. Congrats on that.
Very exciting.
Yeah, thank you.
Now with now in terms of you get the company listed. What is kind of the time frame? Ballpark look like? Obviously, it's gonna be different for every deal, but kind of give us some kind of idea of what timelines could somebody expect?
A deal like Vertex is pretty specialized, and it's really only someone within the industry that's going to be interested. Your PE fund, for the most part, hopefully I'm wrong to some degree, but is not really as interested in the technology of perps DEX. Yeah, they have a P&L, they're making good money, but their value is much more than that, than just their P&L and their revenue. It's in the technology and the users and all that. So that one takes a lot longer because we really have to find the right fit. The timing has to be a lot right. For example, if Kraken had delayed their ink chain a year, they wouldn't have bought it. For just as an example, right? Or if they were a year earlier or even 6 months earlier, it would have been maybe too late or something else like that. So
sure.
The timing has to be really right when we're talking to all these foundations and all these institutions. I say the word institutions from the crypto side of things. I know there's a lot of kind of Web 2 finance guide listeners on this show. So when I say institutions, I mean like Web 3 institutions. So when we're talking to the institution guys, that the timing has to be right for them. So the short of it is, it depends on the deal. More tech heavy, it can be random, it can be super fast, super slow. A more private equity deal, that's got really good P&L. For example, we're selling now, probably our hottest deal right now is a PR media site. It's got a newswire and a media backed in a media publication. They have a really large domain authority, which is the SEO score. It's 75, which is very big, and takes a long time to build that. It'd be like, Nike.com, right? Or Yahoo.com has probably a score of, let's say, 85 or something. So it's just this behemoth in terms of authority for how much Google trusts it. And then they have a massive P&L. They're doing I think it's 11 million right now in revenue. 4 of that's profit. This is their past 12 months, and then they've month over month they've been growing a lot, especially the past 6 months with how the market's been. So that one's a lot kind of easier on the surface level because it's a media company. It's it's got influence. It's got a great P&L. It's it's priced accordingly. That one's easier, and there's a bigger buyer pool, right? It's not just a centralized exchange that might be interested, or a technology-based company that might be interested. But even a PE could buy it, right? Based on a P&L.
Yeah.
So
And I'm sure there's a lot of I'm sure the legal work could take long, especially when you're dealing with larger institutions like you mentioned, like Kraken's Inc. I'm sure that the legal work probably takes a couple months itself.
For sure. They actually they're pretty aggressive when they're ready, but there's definitely the bigger the company, the more bureaucracy you deal with as normal. But I'd say the same on the. Well, you're right. Actually, that's not true always for the PE firms and the roll-ups. Those guys are pretty quick.
Right. Yeah. Is there a lot of times like that buyers will come to you too, like this example, like Kraken Inc. comes to you and says, hey, we want to find a perp dex. You guys got somebody in mind?
Yeah, we do that as well. So not only do we represent the sell side, we have buy side representation. A good example, an Inc. fund or Kraken's fund, or we've had other exchanges come to us and ask us for wallets. So we go out and do like an industry-wide search on wallets. We actually have a whole bunch of them still from one search we did. So if you need a wallet, we have a good list right now. It's ready to go. You can send it over. So yeah, we do that. We do that side as well, and that's again success fee. Everything we do is success fee, and it's based on really gumption. And we talk to you. If we feel that you guys are serious on your buy side search, we'll do the work there.
That's interesting. So I guess you're seeing a lot of different deals come your way. Any specific trends on types of deals that you're kind of seeing, like maybe from last year to this year, or based on the current market conditions? Do you see certain things happening, or is it just all over the place based on what you're dealing with right now?
I think the market has certainly been really good, and especially the past few weeks, we've been super busy. Like my Telegram is nonstop. And on the buy and the sell side, there's been a lot more kind of. I wanted to mention this like on the political side with the U.S. being a lot more proactive in regulation and these new pipe structures and kind of all this new inflow of interest and money and clarity in the U.S. There's been a lot more U.S. funds, a lot more U.S. Interest out there, and that's pretty refreshing. I'm American as well. It's refreshing. It's nice, and also from a business side, it's the largest economy in the world. It's great to have that. And then trends overall. Again, the past 6 months, there's been a lot more deal flow in general. In like terms of niches, we've seen a lot of Launchpads. I think Launchpads had a pretty difficult past 6 months. There's not been a lot of like successful launches in general, so we've had a lot of them come to us. A lot of those guys are, let's say, strung out, or what's the word? They're stressed out, and they're kind of on. Running a Launchpad takes a lot of work, and when you've got kind of 6 months of dry business, then it not totally dry, but it's feast or famine for sure with Launchpads. Like we're selling one right now. If we had looked in January, their TTM profit was $10 million, and then we look now and it's like $6 million for their trailing 12 months. So yeah, I mean, like they had an amazing 2024, and it's just severely dropped off since then. I have full confidence that when the market's back, they're going to be back at that massive amount of of revenue and profit. They're highly profitable. They're like 90% profitable.
What's
Um,
changed there? Talk more about the last like 6 months with these launch pads.
it's not like Launchpads. It's not the Launchpads' fault, or it's not them. It's just the launches in general. Like no one's. It's I think a lot of people listening know like and probably agree there hasn't been a whole lot of great launches happening. We had Pump Fun recently, so I'm eating my words, but
Yeah.
this whole year, we haven't seen a whole lot of launches, and specifically not successful ones. The market's pretty saturated. There's a lot of launch pads out there. There's not a lot of really successful ones, but there's a lot of launch pads out there. And if there's but more of the point is that there just hasn't been a lot of investor confidence in like liquid tokens. Just altcoins have been dry like everywhere.
Yeah.
Everything that
Yeah.
I see.
Hopefully that's changing right now.
Yeah. I'm hoping too. I mean, there's a whole lot of action going on right now. We're starting to see Ethereum pump up. What are they? 30% yesterday.
Yeah.
So this is like the textbook thing. I'm not saying it's going to happen like this, but Bitcoin pumps, then Ethereum, and then it trickles down. That's the textbook cycle that we've been seeing. It doesn't always repeat itself, but I've got my bags aligned in that fashion.
See where it goes.
Yeah,
Absolutely. That's exciting. Going back real quick, Harrison, to you brought up regulation earlier about with kind of things are opened up in the U.S., which is great, right? Are there any jurisdictions where crypto M&A doesn't work due to like regulation complexity or lack of enforceability, or is it just deal by deal, you take it as it goes?
Any jurisdiction.
Different areas like UAE, Singapore, Europe. This is a global kind of M&A endeavor, from a marketplace perspective. Is there any kind of things that come up like, that's a tough situation to kind of deal with from a legal or regulatory perspective?
Yeah.
I'm just curious. Maybe not.
Certainly any, what's the word? Like Korea or China. Certainly any of those jurisdictions are harder. A lot of we pretty much do KYC. If there's any buyers out there that are serious. But for the most part, like the answer is kind of no, because we do mostly assets. So we're not really doing too many securities. And if we are, we're bringing in a third party broker because we're not a broker dealer. So we're doing mostly asset sales. So in that regard, like you can buy an Apple from anyone. I wouldn't recommend buying it from someone in North Korea.
When you guys started this in 2022, obviously a lot of crazy shit happened. That was kind of the year of the FTX, Celsius, and handful of others, Terra Luna. What was it like back then? And kind of how has the landscape changed over the last couple of years?
We've definitely lost out on deals because of all those, all the above. Deals lined up perfectly, and then boom, FTX or something, and then it's like, oh, sorry, we're out. And I'm like, I don't blame you. But dang, I wish we closed a week ago. That's happened like multiple times. And we're success fee only, so that hurts us. But yeah, that's how we want to operate. Like just on the trusted side, we always we don't really charge the upfront fees. I think there'll be a day where we change that and we run more IB style, or we have at least like an IB arm. Investment banking arm. But over the past 3 years, those big events certainly hit us, and then I think we've just gotten better. Our brand has gotten better, just like everyone, right? We're always growing. Our brand's getting more popular. We're doing more of these interviews. We're out there more. We get better. We get smarter. So it's always an iterative process. We're not going anywhere. Jan and myself have been, business partners for the better part of 5 or 6 years.
Is this like the busiest time, like right now?
I feel it. I think so.
Obviously, we just had the Celsius IPO. or not Celsius, the Circle IPO.
Right.
Yeah.
Yeah, and then this past quarter and this past year has been the highest in history for M&A in Web3. So that's like a pretty important statistic for us.
What else you get? Are you guys seeing a lot of inquiries for any like specific types of like buyers or sellers? That stand out to you. Perp dexes, things like that.
Certainly, when the perp dex, when we sold Vertex to Kraken, we got like three new perp dexes come to us and say, "Hey, you wanna sell us too?" So anytime there's big news, everyone gets excited and you get inbound messages. For the most part, all of our sell side is inbound. So that's really nice. We have a lot of referrers out there, a lot of agents that bring us deals. We give them commissions. We're very open about commissions. So anyone that wants to bring any deals, mention this podcast and we'll get the commission structure going.
All right.
And
Nice.
yeah, we're very open on that. It's Web3. Everything's transparent. That's what we do is we're deal flow managers. So we want to make sure everyone gets in on the deal. And that it stays clean though. So we're usually direct with buyers and sellers, but anyone that brings us those, we're making sure they get a cut. And then the same on the secondaries. So we didn't touch too much about secondaries. So on the M&A side, we have that, and then the secondaries in OTC. It's pretty similar. So right now we have some pretty large funds, as I said, some foundations that are selling like lock tokens, like 6-month lock, 6-month cliff, 3-month lock, 3-month cliffs, bigger chunks of tokens. I think we're closing like a 5 million round right now with a pretty popular, let's say AI narrative coin. There's a few other big ones out there. So any funds that are interested, please always reach out.
Could you give us an idea of like for like 6-month lockups like that? Like what type of discounts you looking at?
Usually in like
Ballpark.
the 20 to 35 range, something like that.
Yeah.
You mentioned this is all on your marketplace, your platform, both secondaries and kind of your.
A lot of the deals
stuff?
are, let's say 90% of the deals, but the top 10% are not. So really, if you guys are serious, it's just I don't like that's how we have to do it. I'm gonna plug my computer in here. I don't like that's how we have to do it, but some of these deals are just too sensitive for us to be posting out, of course. So really, any funds, let's just have a relationship. We don't have to go to the bar together, but just a simple message. We can pass over some deal flow. A lot of the deal flow we pass is kind of redacted, so there's not too much information. And then if you're really interested, we sign an NDA and then move from there. But yeah, it's just kind of the privacy of a lot of these foundations. They don't want to be sharing too much. But there is a lot of the deals that are private. If you are interested, definitely let's have a relationship, because all those private deals are the best deals are the private ones. Let's say that.
Yeah, it makes sense. That definitely can understand that. From a kind of your platform perspective, you mentioned AI deal that you're kind of potentially working on. Do you see AI playing a role in deal matching, due diligence, or valuation modeling on your platform? Or obviously AI is a big area for a lot of different facets. But
yeah, I love that.
If you guys are seeing any of that.
The deal I was referring to was a token that we're selling on the secondary side. But yeah, AI. I mean, we use it every day. I use it personally for a lot of my email writing and things like that. We've been using it more and more for research on like reaching out to buyers, like finding buyers and generating lists and things like that. I think it's something we're going to always be using and iterating internally. I've talked to a few groups out there that are using AI for valuation purposes. I'm always interested to have those conversations and see how much we can plug into their systems Probably not something we're gonna develop in house or anything. But who knows? Yeah, and deal sourcing. I do see a world where we have like an AI agent that's really helping us do outreach for more and more funds and more buy side out there, and also sell side. But we haven't had the need yet, which is nice. That we've needed to do too much sell side outreach. We've had just a lot of sellers come to us, and we're really at kind of a critical point right now where there's a lot more buyers coming to us too. So
That's great.
Harrison, this has been a lot of fun, man. Really appreciate you joining us. Where could people go to connect with you, learn more about Acquire.Fi, and what are some of the types of people that you want to meet with and connect with?
awesome. Yeah, we're always open to have a conversation. You can always hit me up on LinkedIn. We have the Acquire.Fi LinkedIn, Twitter, Telegram, of course, our website. Make sure you get on our Deal Flow channel. It's on Telegram, so you get updates every time there's a new deal, which is pretty much every day. So you'll get an update right in your Telegram. You don't have to go on our website and look through the marketplace, which you can of course do as well. But I always like to push people towards that, and then of course we post those out to LinkedIn and Twitter as well. So make sure you connect with us on all those, and you can always reach out to me on LinkedIn or anything there on Telegram.
Yeah, and you guys want to hear from funds, buyer or VCs, sellers, obviously.
Yeah, so buyers, sellers in general. So those are plenty of PE funds, token funds. As I said, we have deals. We just want to share them with as many people as we can. So let's have that conversation and let's talk. And yeah, we're there always. And then also, deal flow agents. If anyone out there has a deal that they think is good, we're always very receptive and very open to giving commissions on there too. If you come through this podcast, let's make sure we mention that too. And yeah, we're always here. As I said, we're deal flow makers, we're networkers in the space, and we just want to talk and hang out with everyone. So
That's real cool. Well, that's amazing, Harrison. This has been a fun conversation. We'll make sure to include all that information, your contact info in the show notes as well.